Like when we had that 8-point move, I could see it through here. I could tell right away. So let me do this. Let me share the screen.
Yeah, it might be easier.
Yeah. So I'm sharing it. I guess you can see it, maybe. I'm not sure.
Yeah, I can see it. It works fine.
Okay. So like everything, the pinnings are creating the geometries of the market up and down. So that's what it uses. And it lets us, what we'll be able to do is, a lot of the times people trading in the stock market, they use reference points. It's either a day of the week or a date on the calendar, or they'll use like a event, like FOMC or whatever. What this is doing, and as we get more stuff in the database, then we will be able to do that. We need to populate it with like FOMC days and auction days on the 10-year and the 30-year, so we can start to build more and more stats. So we need to pull that in. So right now it's doing geometric matching, which is the HL matching, and it's doing weekday matching. And what happens is when we do weekday matching, if we're looking at Friday, then it's looking at all the volatilities from all past Fridays in your data set. So when I do weekday matching on the sinusoidal wave, we'll see it like this for Monday. And then if I do the matching for, right now it's the matching for the geometric moves, it looks like that. So what it does is it tries to figure out, okay, based on what I know about the past, what will be the future move potentially. And right now it's telling us Tesla, most likely we're going to have a dip down on Monday, the 18th.
What do
And then based on what it knows, we could have a massive dip down to the floor that was computed on Friday.
Is that the floor?
Yes, it is. So it puts the data onto our screen here, so we can also see that.
Oh, that's useful.
Yeah, it's like really, because what you can do is I'll come in here and I'll pick like March 22 down below. So I click on the tab, and what it does, it tells the system, okay, go ahead and grab in the option data for that. And then I can come up here, and from Friday here, I can draw down into that Monday with my legs. And then it will show me information up here about that leg for Monday. And then any strategies, and the strategies, I've been working on them. All these little graphs, they're all in there, and I just have to finish them out. So it does like, iron condor, all kinds of stuff like that. Doesn't have the jade lizard yet, but it has the 6, let's see, is it 12 or the 16, I think, classical option combinations, spreads and directionals. So right now I picked these 2 directionals. What's so interesting about this is, and it's hard to see without some tool, when you start to draw, you can see how selling a call starts performing immediately. It's like gunpowder. So it's like if you sell, like when I start drawing, I click here on Friday, it's close price, and I start drawing down. You'll see that selling a call is like so freaking fast in gains. Or selling for premium, you'll see that it picks up steam more than anything. And then It's kind of hard to see here, but let me move over. And then you'll see it puts our BE line on. And you can see the spread between our selling and our BE. So the BE of selling is almost instantaneous versus the BE of holding directional. And that's just the break-even point. So whenever we set up moves, you can see what is performing the fastest.
Oh, so you can just drag it to wherever you want. And it'll...
you just go crazy in here. I mean, you can create so many combos that it's just sickening. And, you just start scrolling. So it just gets to where you can't even see what's on the screen anymore.
Oh, God.
So you can have trades working like so many different ways. It's just sad. So I've got 7 legs on right now. So that's why down here when we submit, that's why on this system, on the SpreadMonster, I have to hook this up. You basically add these trades that you want to submit into the server, and then the server's sitting there looking for these trades to action. Because you can, just put on theoretically so many different trades, so many different ways that it's just almost impossible to humanly manage them. So the system can manage them. And so you can see it creates quite a mess. And then if I go over to the volatility graph, I can see where it's laid out there. If I go over to the odds graph, I can see where it's laid out there. So what I'll do is I'll delete the legs. So it lets, it's a way to predetermine, like if somebody, like sometimes like if I'm busy, and the way this all came about was because years ago, sometimes I get busy in the day because even now I do when I'm working on software and stuff. And I don't want to have to sit there and stare at the screen. So I built this whole model so I could send in my orders and not have to babysit them.
Side question. Is this... So because you're using IBKR, is it going to be exclusive to IBKR?
Yeah.
Or is that... Oh, okay. So you can only send in orders to IBKR?
Yeah, what we really need is we kind of need our own brokerage to send orders into our own place, or at least an API to where we can spread and fan out orders across various systems. That way we could do arbitrage also easier.
Is it because Thinkorswim doesn't accept it anymore?
The problem is, unless we have an in with these companies, we need to go into like what's called the fixed protocol. So we need to kind of, and this is the problem, we need to kind of bypass the front ends these guys put in for us. Because we need to jump over what the front ends they have and actually go back into the trading servers they have and their trading system. So it's like we need a relationship with these people to exploit the stuff properly, to really exploit it. We need to jump past the front ends they provide us and say to them, hey, man, we just need to go into your trading systems and not be fiddling around with trying to log into, TOS or into the IBKR front end or into any other trading system so that we can connect right into things. So, and the power comes with the more of us, the more power there is to influence them letting us do that.
Was that your end game goal?
Yeah, ultimately I'd like to be able to plug into the stuff, yeah. Or have, like, Milk and Rogue Moose I've discussed to have our own, either like type of brokerage where we can have our own servers there, and we can have these servers that are running our orders closely tied into the exchange, ideally in the same server room, on the same network, coming off the same catalyst switches. That way, when we're sending in orders, if there's an internet disruption on our front ends, we don't care so much because we've submitted the orders and the servers back there are taking care of it. So that would be the ultimate goal, is to actually tie in, to have our own set of trading servers that are tied into the exchange as tightly as possible. Because then we can do all kinds of stuff. The high frequency trading, if somebody's into that, they can do that. Or if, somebody just wants to be a little bit more removed and place the orders like we're showing here at the SpreadMonster, just, or, if somebody wants to use data sets that are in the SQL server and then build into an API, that we have to be able to submit that way. So there's just different tactical ways to get in. But yeah, so that is the end game, is to try to get servers tied in, because with the technology we have, and we're going to have even more of that as it rolls out, it lets us exploit the market more and more. If we can seamlessly buy and sell options, for example, directionally, without any interference from the internet going down or, data lags or whatever, we can exploit, when I sit here and trade through the day and I see the vector, we go green and red, we can exploit that because we can use quantification to determine how high and low these moves are. And that guy Boston, he was saying, that he was waiting on his 100% moves, right? Well, you got 20% moves all day long. It's fun to wait for 100, but realistically, 20%, people would go gaga over that if they could see that that's what we've got going on. 50%, 40%. It's like, it comes to a point where it starts to sound exceptionally greedy.
With the way the system is, that you kind of buy these cheap contracts, it's a given that you would get 100. It's kind of natural at some point now that you can expect these type of numbers.
Yeah.
Still,
it definitely is. It definitely is. I think I did an injustice when I was showing the game theory the other day, because it's just a model, right? It's got variables, and you change the variables and you see what outcomes you can get. And I think he took it that, if I buy QQQ, I'm going to get my 100%. Not that it's game theory and it's like you're controlling variables to see what various outcomes you can have. I think, I don't know. And then it seemed like, then I could tell he was trying to trade to a certain amount of money. I could tell that right away too. So
it's kind of what happens when you just get tired of learning, I guess. So you just kind of want to treat it like gambling at that point.
Yeah, it does. And it's hard because, like, 1 week we'll see contracts where they move, 200, 500, 1,000%, 2,000%. And then the next week it doesn't happen. And it's like, well, why is that? Well, it's the market has different biases all the time, So you can't really expect it to behave the same all the time.
Dear God, you have 20,000 messages.
Oh man, it's like right now I'm kind of watching for that NASDAQ composite. It looks pretty vulnerable right now with the pullback.
Yeah, so we're on the verge of testing the vector into a breakdown. That was as well as the overall comparison to the previous instance.
Yeah, it really doesn't have a good track record from this level of breaking up. the NASDAQ composite. So it's just, man, I don't know. That inflationary data would have to come in really good, showing that it's easing. I think because that COVID high, it took the government pumping in all that money to blow us out of that resistance zone. I don't think they've got that right now.
I don't think we have any money left.
I don't think so. I don't think so either. Janelle has a cat that was walking around up here. The cat BB.
Damn.
So I was kind of thinking out loud when I was sending messages that, like, I was kind of thinking putting Periscope bearish and then watching these put sides, because I've noticed, like, I had this happen during COVID. When I was trading, like, all hell breaks loose to the downside. It's like all of a sudden everybody's math, their systems start coming unglued when it starts hitting outliers to the downside. And I noticed that during COVID, and this kind of happened .com, man, we were getting like 5-10 standard deviations down, which, mathematically is not really hardly that often. Like, I think, like, okay, it's 5 deviations down. Next thing I know, the stock or something would be like 10 down. And it just really starts, it's like all this math starts coming unhinged. It seems like when it starts breaking below expected levels.
Yeah, I mean,
so
on the long term,
sometimes, like,
go ahead.
Oh, no, go ahead.
No, I was just going to say that overall I'm still bearish on the downside, considering how overextended we are on SPX. Like, I think we're up 30% overall right now for the year.
Yeah. Yep. Yeah. Somewhere in there, yep.
Could I ask a side question? Okay, Russell? In Periscope, Is there any way to do a straddle? Because my biggest problem is, and this was a little thing I had with my wife, like ENPH, it moves, but which way, right? I was having difficulty. So I said, well, what if I just did the straddle, right? Can I get it cheap enough that I don't have to pick direction, I just need velocity?
Periscope, I need to add that capability back into it. When I started just putting it back together, I just kind of got core stuff running. So, yeah, you can do stuff through that like it once I get that stuff all put back together. Because this stuff is coming out of the thing called Inspire, the other system, and I'm porting the code over. And it just, it's just not a direct port. But yeah, eventually I'll get that all hooked back in. The SpreadMonster thing, you can go in there and set up straddles on it and stuff. So it'll do it, but it's just not very automated because you do have to go in and draw it out. Whereas and if you look at Periscope, it's crazy on the destruction of premium. Because you can pull up a lot of contracts and you'll see they're all destroyed on the premium side. So another thing that needs to be done is, like, spreads and stuff where you can take out the premium and collect it. Just time.
Yeah. Not to ask too much of a rushing question. Last time, I think you spoke about it. You said that SpreadMonster was like 2 weeks, but it looks like it's been extended, and it's kind of like
Yeah.
an unknown deadline now.
So
it looks like you're adding a lot more to the system.
I could. So the SpreadMonster, I thought that I would be able to get stuff, during the day. You know what's happening is I get on Discord too much during the day, blabbing, and I'm not working. That's exactly what the truth of it. That's what's going on.
Oh.
So what happens is something that should be 2 weeks now all of a sudden is like I've got 5 weeks, and I've probably made the progress that I should have made in the 2 weeks just to get it knocked. SpreadMonster, if everybody's kind of cool with the limit functionality, then I can get it out there in a couple days if everybody's cool with that, because I don't have the thing implemented where it queues up the work orders, and we don't have the back end plugged in so that it submits the orders to the server to connect into IBKR. So that stuff's missing. I've been trying to work on that. And then the other thing is the system, it's built on CSV files, a lot of it. And I've been converting it over to SQL Server into the database because it's just easier. Mm-hmm. And that's been taking time too, because I had to build import code for that to get the Yahoo data in there.
How much stress do you think it would add to the server overall if everyone used it?
So, yeah, like every time you roll out something and it starts to, work the server more and more and more, yeah, it's going to add some to it. I'm not sure how much, but it does. Like right now, in the background, it's constantly having to pull data and populate the database with. Because the way the SpreadMonster is working, this contract data is in our database because it needs that. Because I don't know if you can see, but on the screen, but as you move up and down, it's moving through the contracts. Yeah, so for that to all work, it has to be in the database and stuff, and yeah, so it's just so I don't know. I doubt. I think what you're asking is, so if we put this out there, is like the server going to be even slower, and then it's going to come to even more of a crawl, and even reject more connections. I think it's going to have a little more load. I don't think super heavy. I don't think it'll be like that. I don't think.
Can I suggest
printers?
Sorry. What if we just limited it to a few tickers, right? Let's say we limited it to QQQ, ES, and NQ, just like the main 5 ones. If we limited it to that, just so that at least people could get market direction, right? You got your QQQs for all your 7 mil fanatics. You got your GSPS for your SPX people like me, Eco Rogue, and whoever else. You got your ES for everybody else. That covers a lot. NQ to give us a leading indicator for the QQQs. If we just did that for everybody, but then your limited people such as you obviously could spit out whatever one you want to put up, right? If you wanted to show a AVGO or what have you, you could show it at your leisure, right? Would that be a good way? I'm in the boat that earlier is better, because not everybody, no matter how good this system is, A, not everybody is with that broker, and B, not everybody has the fortitude to automatically do it. Everybody says they want to do it, but you have to put in a substantial amount of money. You can't put in $300 and say automatically trade that, right? It's not going to work, right? You're probably going to have $10,000-$15,000 so that you could execute these orders, and it's a learning curve. So I think it might be better to just have people be able to look at the SpreadMonster, toy around with it. I mean, I'm still learning fractals, right? Uh, so it might be beneficial to just have the basic out there, that it just gives you the levels. Okay, now at least I know what the outlier move is, what my 50% range is. And I'm still learning my spaghettis, right? I get it that if we have more spaghettis going in one direction and one spaghetti going the other direction, well, the probability is we're going to move to that direction first, or at some given juncture. It's going to take a lot of people time just to assimilate with that part of it before you even talk about automatic tradings. And I hate to say it, but not everybody's, like you mentioned Jade Lizard. I know what the hell a Jade Lizard is, but I guarantee you that 95% of the people in this group never heard the word Jade Lizard, So it's kind of dangerous kind of
Yeah.
giving them a Jade Lizard option, because if it's not properly executed, then you do have a naked side. Then a lot of them might not even be qualified to trade a naked side. So Jade Lizard's off the table. So why even put it on there? If they can't get through simple call options and put options and simple spreads, covered spreads, which are your next exotic level after, I think it gets a little crazy. That's my 2 cents. I hope I'm not stepping on anybody's feet about it, but I think you give the simpler facilities first and let people warm in on it.
Yeah. And if everybody's cool with, not having everything in there, then I can definitely throw it out there in a few days. I just need
No, I didn't say all
and then
that. Sorry. Go ahead.
Oh yeah, and then I'll follow it up with the more the ancillary capabilities, with some future releases. I'm dying to get. I need to hop over into the seasonality and because it does fractal splitting, and until you see it, it doesn't sound like it's anything, but you can actually pull in time periods into the fractal chart and it joins them up, and it's just crazy stuff. You can see like all these moves that you just can't see without that. I'm desperate to get that back all hooked up, but anyways, yeah, regarding this, I can if Amiva said he was gonna double check some stuff for me, because I just need to make sure I haven't made any mistakes. It should be pretty clean. I'm pretty careful all the time, but yeah. And then and then also Rogue Moose, he wanted to get it so I could start checking it and stuff. So yeah. If those guys check it out for two days or so, and if you want to, IQ, check it out too. Validate things.
That would be nice.
Yeah, and then if it's looking like the math is correct, because it always gets a little dicey when I'm doing my math, because to create the MGB BEMLs, I just have to always make sure that it should be correct, but it needs to be validated.
Doesn't hurt from our eyes.
And yeah, exactly.
I
come from a structured. Yeah. Oh yeah. I could do that. I haven't had time, so I've got the volatility, the density, the odds graph there up and running. The overnight crush and what I call the options nitro thing, I haven't started working on those yet. I need to get those in there. The strategies here, I can't remember. I've got, let's see, so I've got straddles, I've got directionals. I didn't implement the strangles, the condors yet, and I need to get those. So yeah, if some of these emissions are cool, then yeah.
By the way,
biggie.
I think we clash a lot talking because I figure you might be a little bit far from your router. Could just be an internet thing.
Yeah. Yeah, it probably is. Right now I'm pulling a bunch of data to over the line I have, so.
But no, I didn't bring all of that up to say, yeah, you should rush on it. I was just, like, asking. I mean, I'm sure people are excited about it, more than just me, about being able to play with it.
I am.
Yeah, it definitely gives a leading edge, because I'll tell you, I mean, I come in here and check it all the time, because this information's like, I don't know what it's doing.
Can I ask a quick question on the spaghetti lines? There's the two purple lines. I assume one is 9:30 a.m. and the other vertical line is around noon, or are those two lines, the purple lines, insignificant? What do they represent? I thought you said one was midday and one was like 9:30. I could be wrong.
Yeah, no, that's what I said, but I was kind of making it up. So, what's happening is, and I'll kind of explain why. So, this thing, okay, so when I'm doing it like this, so I'll walk through. So, when I open Tesla, for example, and I go, and this is the base thing that I do, and this is what I suggest everybody do to start with, and then get more fancy. So the first thing I do is I look at daily one. And the reason is it's creating our histogram, it's creating our, so this is our chaotic data series here that we're seeing, up and down our histogram chaotic data. So what I want to do is I want to feed this into SpreadMonster. And what I typically will do is I'll start with the first 50 days. So I'll go down here and I'll load 50 days. The rationale is I want to be close to the market action. So these last 50 days, about 2 months of data, I want that to be my input into SpreadMonster, because I'm kind of telling it how I want to look at the market. So I do the daily one, 50 days. Then once I open SpreadMonster, it's going to use that as my data set. When I do that, and I come into the Sinusoidal thing, it's telling me my relationship on that graph to what the forward-looking outcomes have been. The problem comes in, and you're mentioning this AVP, so on Monday, for me to garner as much information as possible, I need to break the session up somehow. Now, the issue is when we do this on the daily, we're getting information out of Yahoo and it comes over into the database. It doesn't tell us when our high and lows have been established, if you catch what I'm saying. So when I look here on Friday, I don't know when this high was established, this low. I know when the open and close was established, because opens at 9:30, closes at 4 Eastern. But the high and low, I don't know.
Oh yeah, it
like all these right, they're wrong. Yeah, so I don't know time. So what happens is when I go into SpreadMonster, it's like, and I go into the Sinusoidal, it's like, well, I don't have any clue what time the high and the lows were at, right? Because there's no data returned. And what it ends up doing is drawing the spaghetti pattern this way. It says my low came first. It says my low came second. So, I think I was mentioning probably days back in Trade Lounge that when I give these graphs out, that's an issue. And I'm in the process of correcting it. What has to happen, though, is I have to go granular into every day, and then I have to go to Yahoo and say, give me the 1 minute data, and I have to see when the high and low is established, and then I have to mark every daily candle for that. Because otherwise, what has to happen, we have to do this interlacing.
I had a question
And
about
it's
that.
just more efficient. Yeah. Oh yeah. Go ahead.
So typically, you can grab the 60-minute aggregations. Would that not be, on the fractals itself, would that not be relevant enough to be able to give, say, an estimated time frame in which hour that had occurred? Because I know you can grab that on the fractals itself.
Yeah, and we definitely can use that, and I do actually use that my 760. And then if I open, well, like 50 trading days. Yeah, so now, and this is another thing I needed to correct. So now on the sinusoidal wave, we do get this. And if I change my period to like 5. So this is 5 60-minute aggregations. I need to fix the labeling down below. Oh, it's wrong. So it's the first, second, third, fourth, fifth. I don't know why the middle aggregation's missing. Oh, I know why. It didn't establish a high or low, so it's not there. So yes, you can do that. So this is now representing the 760. So we can see now where our swoops are, our highs and lows, and forward looking. Yeah, so this is why I was mentioning submitting of the trading orders, because if I come in here at 9:30 and I'm like, oh, my swoop lows are down here and my swoop highs are up here, I can set up my orders and send them over. But yeah, so yeah, you're right. I could, like, you can, do whatever combinations you want and then see the time frames. I just need to fix the labeling down here. It's on my to-do list, was to fix the intraday labeling. Yeah, there's a lot to this thing.
Damn things actually like.
And then we can see our. Yeah, it's exceptionally. I'll say it this way: it's exceptionally useful. Because most the time, the institutions and everybody else, they're always trading this stuff similarly. Like maybe a little differently, but kind of unfolds in a similar way. So we're trying to capitalize on that. Cones at. It's kind of similar to a parabolic cone, except the geometries are defining the cone up and down. Versus the classical way to do it is you just create your mean through the data set.
It kind of confused me at first because I was thinking of the graph the other way around. Because typically, I expect 2 points to extend rather than intersect.
Yes. So typically, the way the cones are always displayed, they're reverse of how we're seeing it. So the input is on the left, and then the widening is onto the right side. So, and I can certainly add an option to flip it around. I kind of for how my brain thinks, I always like to see it like this. And the reason is, there's kind of a reason behind this. If you go into Amazon, like I was kind of showing, I think it was Amazon, so one daily. I'll change it to 50 here, so kind of see what it's doing. The reasoning is, or the reason I like to do that is because when I'm looking at the input, I can see my line. I can see that Amazon, we're higher than we are lower. For me, a little easier. I guess I think backwards. Because normally on standard distribution, we would expect to come in here and see our green line, our close price, kind of near this apex, near the center.
Mm-hmm.
And here I can see the price was coming down into that. And that most likely it's going to shove it into the apex and possibly below. So I'm seeing it as a funnel. Like, where is it trying to funnel price? And I know in statistics and stuff, you know, you're taught a different way, but, you know, I'm not. And some of the institutional stuff they teach, I don't know. Kind of reject some of it. So, yeah, so I just see it like, okay, it's pushing down into it, is when I look at it like that. But I can certainly add, you know. Yeah. I know, you know, I always think, well, if it worked that well, why are they teaching college? You know, I'm sitting here in my pajamas trading. So, anyways.
I mean, it makes...
Yeah, so the underpinnings of this.
Amazon does look like it could make a double bottom here on that 73. No, I was going to say that the presentation for the SpreadMonster that you have, where it's the bullish move versus the bearish, it does match up better on the overall. For at least the position that it's all facing.
Yeah. When I look at the 7, I mean, we've broken the center line, our reference point. Yeah, it looks like during those times, I mean, it's hit or miss. Sometimes it goes down, sometimes it doesn't, like anything. But yeah, it looks like there's more propensity. If I look at it through here, yeah, so it's even kind of showing on the 7, it's still showing we're up too high, that it needs to come down into the range, price range. You know, and so the idea of SpreadMonster is for it to be very accurate and to have this stuff unfold like we anticipate. And this might be confusing over on the right, it's giving these values. And I do this on purpose. So see how this value is like kind of overstruck and it's darker? The 172.52 roughly. So there's part of the system that looks for duplication in price areas. And when it's seeing it or near duplication in price areas, it overstrikes. So when you see this stuff overstriking, like up here, and here it's kind of, you know, definitely overstriking, and down here it's kind of trying to overstrike, and way up here it was trying to overstrike, that means it was more of a magnet for the price, that we hit those areas more times than not. So by looking at this, I can already tell tended to gravitate right into this area, the 172.52, which puts us 72.52, so it puts us down here somewhere. It's kind of interesting. And then like when I see stuff like that, I can start to draw it out and see what happens. So I can draw into this area. So I can see that on selling of the call, it would capture a minimum of 42.1%, if not 99% of the call. And then I can see all these other, everything else is losing.
Oh, so it's like, yes, this call option to sell is going to go down 42% most likely with ours.
It's going to gain 42.1%. So when it shows up green, that means it's in the positive, and that means it's going to be 64. So if from this last price of 174.41, 174.42, if we move down, the lower we move and the longer we stay down here, the more of the maximum gain is captured. It's saying right now, if there's just a quick hit down, like we go down to this level, and whatever happens next happens, but if we go down to that level, we'd be able to capture $1.64 on the on that 172.50 call. For us to, if we're buying a put directionally, right here, BTO put, we would have to get down to this green line. This is the break-even line. So BE's break-even. We would have to get down to the break-even line to have a gain.
Oh, I'm starting to understand how this works.
So what happens is we have $3 and 80 cents. This is the bid ask. So it's 380 by 390. 154, 156. So when you go to buy an option, like let's say we're buying directionally, and this is what happens to everybody every time if they're trying to do it. It's like, where is my break even? Like, what kind of spread is there in the system before I can really start to see gains? Because until that break even is hit, it's all implied volatility. So the only thing that could help is a velocity move of some magnitude. So this is telling us that. This is telling us unless we have a velocity move of some magnitude, our break even is way down here holding the put. So if I buy to open this put and I spend $3.90 on it right here,
You just lose.
Unless I can get to the BE, I'm going to lose. It's 100% loss, guaranteed.
Can I just ask a quick question? The BE for the sell to open on the calls and puts, isn't it wrong? Because if you have calls at 172.50 and you got in 380, your break in should be like 176, not
Yeah,
174.29.
it's funny you mention that. So we have a couple different things. Like if we're doing naked,
Yes.
technically on a sell to call, there's a big maximum loss that can be occurred, right? If you're selling a call, literally it's unlimited. Your maximum loss. because
Zero
it could
day, you
go
could say
up infinitely.
25%. Usually cap you at a minimum of 25%.
Yeah, well, yeah, right. Technically, it could go forever. So what this does is it looks at the movement that's happened in your data set, and it sets, for example, the maximum loss at 236 based on historical volatility. So it's giving you a heads up, for example, on maximum loss, that based on historical volatility, well, it's $2.36 you're probably at risk for. Now, the BE that you're asking about, the BE is calculated as this green line right here on the top,
AVP, please.
which comes to 174.31. Let me move the cursor there, make sure it's right. About 174.31. So from our last price to the BE, it's saying that it should be, and this is where it needs to be checked, 174. So our last price, 174.31. Yeah. So the BE is slightly underneath the last price on this green line, is what it's calculating it mathematically.
And
And
you can do
then
this for almost anything.
it's saying, yeah, anything that's in the database that we're capturing options for. So you can see that from the BE for the sell to call. I mean, it's just almost instantaneously you're starting to make money. You know, if the price is on a downward spiral, if it's moving down. Versus if you're holding directionally, your break even is way in the heck down there. And I can do the same thing on the upside. So I can see my break even on my BTO is on that green line way up there. So on my leg 2, I can see that I have all losing positions except if I'm selling the put. Because it's in the green.
Okay, so even with the system,
And then
it still looks like you have to manually design the trade.
with this, you would have to manually design the trade.
Mm-hmm.
I'll have an automated button in there at some point, and it will draw these out for you.
Oh.
Right now, I'm just implementing the self-drawing thing, so you kind of have to draw them. Yeah, it's kind of like the system. I broke it up into pieces, like Algo Fun. That one's meant to set up algos to where it auto trades. The SpreadMonster is more of let me draw my trades in and how I want the system to act on them. It's more of that side of the coin. And so it's like when you draw them out, you know, then you send them over to the server for execution against them. That's kind of making some sense.
Mm-hmm.
Because a long time ago, back in 99, 2000, I was working with interactive brokers. And so I was implementing the API and stuff. And I crashed the server complex they had back there a couple times, right? So anyways, and this is kind of how I kind of got hooked up with them. So they called me, the VP of engineering over there. I was like, oh my God, what are you doing? And I guess I was one of the first to kind of start working with them to do the API. So, anyways, I was telling them, and then after that, I became one of the moderators for for IBKR for the TWS API. But so what was happening was at that particular time, I was doing an automated system to where it was auto trading the QQQ that had just come out, and I would do multiple connections into their server room, so I might have 1,000 open, because of what I was doing, which it wouldn't support that. At any rate, so that when I built that whole system up, I decided, well, I need a way to actually manually, and I need to auto trade one way, and then I need a way to actually be able to draw out my orders somehow, queue my orders up, and then submit them. So I need to be able to two different ways to work. So that's how kind of this all came about, was because, after I'd built all that and had issues, I was like, well, I need to be able to do it in a different way also, so I can control connections into the server complex. So kind of did it like this to draw them out.
Gotcha.
And I've kind of changed some stuff. I've kind of changed some stuff up now, but yeah, because I wanted to do it based on trigger points and stuff, based on instructions too. So after I did all that and had issues,
like instructions for how to use the SpreadMonster.
No, the instructions. So when you draw out into SpreadMonster here, you'll see below there's the strategies. There's the status, the strategy, expiration date, strike, trigger. So in the trigger information, it tells the server what you're wanting to do. So those are the instructions for the server that go into the trigger. So a lot of the times, when you're trading, you can do bracket orders or whatever, but sometimes when you're trading, you can do other things like, okay, if the velocity maintains, stay in the trade, which is like radically different than maybe doing a bracket order. You might be like, it's just the instructions can be varied. You could be like, I don't care if I lose this position, I just want my 100%. Like Boston saying. So you could be like, hold the position until I hit 100 or nothing. Just, kind of like whatever you kind of can think up in your head, really, for instructions.
Yeah. I did have a side question, since typically for what I've been doing with Moose is selling call spreads or put spreads. Since this one's suggesting, yeah, you could definitely go naked on a put if you knew for sure it wasn't going to go any lower. But it doesn't really say give protection for the downside if you were to, if the trade doesn't go your way. So these projected gains are more so with the idea that you're willing to take on that risk.
So to your point, when you'd send this into the trading server and I need to hook the button up to do that, when you submit it over, you could define the risk at that point in time. So for example, here it's telling us if we sell the call, we'll have a quick hit on it, and our risk is 235.
Oh,
so that means when you go there, yeah, it's already predefined. So it's saying, hey, you've got 235 in the game.
So it'll kick me out.
Because it's using...
God.
Yes. And you can... So the way I have it built up, I need to get the screen brought over. You can override that. If you're like, okay, great, I know my historical volatility tells me 235, I don't care. I want $5 in there, right? You can put $5 in there. If you're like, okay, I'm going to go with what the system is seeing, and it's 235, I'm going to stick to 235. You could let that ride. It's 235. So it's already because it's like modeling. It's doing the work for you. It's looking back, and it's saying because it's a smart system. The thing's like intelligent. It's looking back and saying, you know what? If this trade works, it's never had a loss more than 235 based on the data set you're telling me to look at. So it's saying if you set that at 235 and you're coming down here at whatever percent odds, which it'll show over here. So it'll show the odds are 31. It's kind of hard to see. It'll say it's 31.25% odds. And then it'll show that it's a 46.9% upside. And
just to clarify,
yeah, so if
so say right now it like the contract itself, the call goes up to like 166 plus 233, so that would be just $4 pretty much for your exit for a stop loss, right? Or would it be 166 or would it just be 233 would be your stop loss?
233 would be the stop loss.
Oh, okay.
Because it's saying that based on what it knows, 234, well, it's kind of like a penny difference. But it's saying from what it knows, it's never exceeded 234 for the data set loaded for the time you've picked.
Oh, so it's actually a lot tighter than, say, like, 233. So it's like $67.
Yeah, you could. Yeah. You could give it I guess it depends on how you want to give it. If you want to give it the full range, then it would be at 233. If you want to give it the full, because if you look on the sinusoidal wave, you can see we've got 2 points here, 2 spaghettis here, 2 here, 2 here. It's kind of, so technically, if you draw from here to here, like it is a super high odds of that being hit.
Even more than 50%.
Yeah. Yeah, because it's like 50% of the action. Well, it's going to be around 50% because 50% of the action's about right in here, roughly. The normal range. It's saying here for the normal range, and it's saying 37 down here. So but when I look over here, the moves, it's, the way I would play it is I'd go from here to here and get at least the 44. I'd get at least $1.72 out of the trade using this.
Gotcha.
Because I only have, and it's like, technically, it's like if you set the break even, the maximum loss, slightly above the 174.42, the trade would work out just almost all the time.
Because once it just flips over, it's kind of invalidated for the most part.
Yeah, that's how I look at it too. Yeah, because once, I guess, it's like once it hits that level, because we got to bypass 2 levels here. But once we get down into this level, I don't know, trying to get more and more. Because this thing, when I get it fully functional, what I want to do is have it be able to also post as I submit the trades over. I want to have it post them into Discord.
Oh,
Go into a channel, and then also, so the system has a feature in it. It's not enabled yet. That we can actually, submit any type of order into the, and then you can actually, it's, I haven't brought it over yet, but you can actually turn it on so you can see other people's orders if you would like. So you can actually see where resting orders are at and everything else. So, anyways, there's all that stuff to come. But, yeah. Yeah. So I'll try to get this out there in the next couple of days, like so you can mess with it, and then Amiva and Rogue Moose.
oh, it looks very fun to mess with.
yeah, I'm always drawing out stuff constantly. I'm like, what if it did this or that?
No, I was just asking because I thought, oh, he's adding like even more features. So yeah, I mean that's fine.
It's it's got a bunch of features to it. It just takes me time to bring them over. I have a Farpoint grid spread that goes in the system that's like Excel, and just a lot of stuff that goes into it.
What was the other wave called? Not the fingers or the Sinusoidal? The one with
So there's this other one.
yeah.
This one I just call odds graph, and
The
it's showing. Yeah, those green and red lines right there, these squiggly ones. This is where the fractal geometries have come out at. So we kind of look in this area here. That's where most of the time the price action's been living in the last 50 days. As we get higher, it's less and less. Lower, it's less and less. So it kind of gives a idea of where it's been living at.
is like 31% or 37% a good benchmark for where the action is.
It is, yeah. So it's showing us over here on these numbers where it's been playing forward looking. So it's been playing from 169.96 forward looking to 170.72 in this area.
So this is like in
And
comparison to sinusoidal waves, which capture the typical areas in which price range exists, and instead it puts it
yes,
more like rather than a time-based thing, it tells you the chances of us hitting certain targets as well as moving in a certain manner.
yes, absolutely. Absolutely. So if kind of like, well, where's this playing? Well, it's right around the 37% on up into the 50 to the 31.25. So it's kind of, showing, like, if I want to see, like, okay, if I think like maybe the market's queuing up for an outlier move, like maybe we're gonna have a big pullback, right? I can be like, well, what would happen if I moved down here? I can see what it looks like. I can see what the market's anticipating, because when I start here at the last price, I can see that, and I'll draw it up. So these BEs, I can see right now with Amazon that the market is scared. And the reason is I can see my spread here is very big versus the long side spread. So right now, as a Friday, there is more fear of it going down, Amazon, than going up. It's kind of like the market maker move. I will mention like sometimes our ceiling and floor, there's a very big disparity spread in. That's fear, long side fear, short side fear. So we're seeing that here in a different way. Because they're jacking up the premium so much that we've got to get down to this green line and below at expiration to get our money back. We at least got to get to the green line to get our money back at expiration. So they're really piling on the premium.
So typically when they pile premium on, both sides are just losing, looks like. And
yeah, both sides are losing. And here we can see they're not so scared about the long side. You know, it looks like the spread to the long side to our break even is almost half as much as it is on the short side. And so all I'm doing is it's just a very simple technique. I get on my close price, 174.41, and I draw up. I get on the close price and I draw down. And the system figures all that out. It says here's our spreads, and here's our break evens. So if you bought that 172.50 call or put, you know, you've got to directionally, you've got to get that high or that low for it to pay out or at least get your money back. And if this continues holding true, like let's say this was for an entire week and it was holding true, as it moves up into this positive area, you know, you could do a call, sell the call to capture downside.
Just curious. So when it says right now 380 for the 72.50 contract, for how much it says 97% is your potential gain. Since we're selling a call, would it just be 190? Or would it be 97% of 380?
It's 97% of 380. And when you sell, it will never be 100%. Is when something's sold, it always has to be bought back for a minimum of a penny.
Mm-hmm.
So probably the closest you can ever get is 99.8 or 99.7, probably mathematically. Never be able to be 100%. So it's probably figuring that when it goes to sell, it might be at as much as a dime on the ask. That's why it's probably 97.4. I guess. So yeah, it's saying 380s. It's probably saying, hey, there may be as much as a dime on the ask side.
Oh, and also, I noticed that on the sell to close call, in comparison to the sell to close for the put or sell to STO, there's significantly more risk by taking the put side rather than the call side, from what it looks like right now, because you're risking $2.35 for the calls, and the puts are just like triple its original. Wow.
Yeah. Yeah, it's showing you a risk profile. Yeah, yeah, for sure. It's just using the volatility that it's seeing for that. I mean, if the market gapped up wildly or gapped down wildly, then it could be, of course, in excess of that.
Mm-hmm.
But it's saying if it holds to what you've loaded, that's the profile, yeah, on the maximum loss. It's 445 to 235. Yeah.
Oh, another question, actually. Uh, Not sure if anyone else had questions, but because this wasn't meant to be like a seminar, it was just like I was just talking to Russell.
Yeah. Yeah.
Yeah, I'm not sure if anyone else is recording this.
Yeah, someone else's. I got
Okay.
someone. Yeah.
I love the stats on the bottom. What do you? The bull count high. Can you show me that on SPX? Does it look like the win
Yeah.
rate?
Yeah.
Because
And I'll
we love to
show you
sell
kind
that
of what the
premium.
stats
Oh,
for
one.
sure.
I just wanted to ask one thing about this before we left it. Sorry to interrupt. Um, so you know how you said that it's capturing volatility, uh, but you're also extending the line, so it looks like it's capturing time as well when you drag those markers.
Yes. And yeah, and the reason for that is it does calendar spreads. And that's another thing it's not automatically hooked up to do the calendar spread. You kind of have to do it manually. But I am now looking 5 forward-looking aggregations based on the fractal geometries that are coming into the system. So on the calendar spreads, and this is kind of a bad one to show it on Amazon. It's easier to see it on SPX or QQQ or IWM or whatever. But when you're coming across, you can actually be on different days so that you can, you know, be on like a Tuesday for one thing, a Friday for something else, a Wednesday for another thing, a Thursday for another thing. So it'll create those calendar spreads across the system. So you can come out here to March 28th, and now I'm running a March 28th contract, and I'm still using the same week here as my underpinning, but so now I've got March 22nd contracts paired with March 28th. So you start doing calendar spreads on the week, or I can expand this into more days forward looking.
Oh, okay. All right. Appreciate it.
So yeah,
I
yeah,
didn't
it's
see the
kind
markers
of,
on the ground, so I thought it was I did see the numbers moving based on that,
yeah,
so I assumed it was accounting for time as well.
it is. Yeah, you're right on. Because here, yeah, yeah, it's based on, drawing it out to specific day and time and then picking a different contract. Like when I come in here with, and this is another thing, and AVP brought this up, like, hey, we're just starting to put an awful load on this thing. And you're mentioning too, IQ. So when you come in here with like QQQ, because of that, I kind of restricted what data we have in the database. So see on QQQ, it's got more days. It's got kind of into the week plus some. Yeah, so I was trying to control it so that, the server's not just, brought to its knees. So again, here we can, draw out under the 19th and 25th, and just kind of, yeah. So you can have all kinds of different dates loaded. Let me pull up the SPX.
Yeah, sorry for interrupting. I just wanted to ask that.
Yeah, this is one. It's showing it is really off kilter. Let's see here. Do 200. So that's kind of what SPX is looking like for Monday. So it's a little bit on, I guess, moving a little bit more to the oversold area, the SPX. This ledge is showing us we've had a lot of support right here in that area. So this apex is showing us, if you take volatility from the close price Friday, okay, and then you calculate forward looking in this data set, what's the top side volatility, what's the bottom side volatility been, and then if you take your contracts and plug them into that volatility, it shows you how, if this makes sense, how far offsides you are in the center of your contract chain. So it's saying if our center of the chain is at 51.2170 roughly, if it's there, that we're a little bit to the short side of it. So what I can do is I can be like, okay, that's great. What does the past Friday look like? And then I can hit previous. Or excuse me, not the past Friday. What does... So we're at a 3L. So I'll be like, what does geometrically does the last 3L look like on this? Like from that level down, what was it looking like the last time? If I click that, it'll go to the next 3L and it'll show me. It's kind of a similar look. And then the purple is what happened on that 3L in the range. So I'll go to the, okay. So this is Friday. This is this past Friday. 3 days looking forward. Go to the previous one. Then I can go to the previous one. And then go to the previous one. And then the previous one. So it gives me an idea of what was happening. All right. Then, okay. So if I want to do just looking at pure weekdays, so here's Friday. And then if I want to look at the previous Friday for the next 3 days, I see that. I go to the next Friday. I go to the next Friday. So that way, if I want to know, like on Thursday, what's been by and large happening for Fridays. Okay, so this is showing me what just happened Friday, yesterday. If I go to the previous Thursday, it shows me what happened for that Friday. What happened for that Friday. For that Friday. So it kind of lets us look quickly into, are we staying between our yellow band here? Are we able to exceed it? So far, for the Fridays, it's almost guaranteed we're going to be inside that yellow. This one dropped out, but anyways, AVP was talking about down here this bull count. So what it does is underneath the data, you can go in here and see how it's kind of putting things together in a sense. So underneath the data, it quantifies what's happening here. So we can see our hit rate. So it says 90% of the time our low price is below the white line of 51.6. So when I click on that, it kind of puts a box around it to highlight it where it is on the graph. 90% of the time, the bear count is at or below the minimum average. And this is for Monday. Excuse me, am I on Friday? Sorry, let me get on Friday. Okay, so this is for Monday. So almost 9% of the time we're going to be below the white line. 82.93 below that. 78% below that.
It's saying our likelihood of ending below or not touching.
It's the likelihood of the price at some point in time being below. Let's say on Monday opened above the white line at 51.2784. If we open above the white line, that means 87.8% of the time, almost 90% of the time, we do get below it.
Okay.
So if trading on Monday and we opened up, what's that?
But it doesn't say that we ended.
Oh, it's at
the end of the
AVP?
day. Yeah, sorry. It doesn't mean that we would end the day below it, right? We would just come back underneath that line.
Correct. It doesn't say we end the day underneath, just we come back underneath. It's saying that what are the odds of being above or below at some time in the day. So if we gapped up on Monday and we're like, God, what kind of trade could we put on? Well, 90% of the time we're below the white line. And let's say we gapped up here and we're on our yellow line. We're like, well, that's kind of a no-brainer to look for a pullback under at least the white line.
Very helpful. Extremely helpful. Because we get screwed all the time when we get like an R1 hit.
Yeah.
And then we go and sell S1 for pennies, only for it to come back to what we would call our midline. And we sell for 50 cents when you could sell for like $2, right? Now, if you're telling me 90% chance we can, at some point, so if I had this live and we hit R1, and let's just say R1 is at the 49% yellow line on the top, right? I'll be patient because I go,
Yeah.
there's a very good chance we can at least touch underneath it. And that's all I care is if it touches underneath it, right? To get me my
Yeah.
premium. So, yeah, thank you. That explains it very well.
Yeah. Yeah. So that's how all these are rolling. And man, you can come down here. So, because what I like too is I like to know what it can't do. And if I come in down here where there's things that, the price 9 out of 82 times, it can't do something, I'm like, okay, that also gives me odds the other way, right? Because if we got down there, it's like, well, most of the times it can't do that. So I'm going to look at maybe a counter move. So it can be used both ways because I'll come in and I'll look at things like, oh, okay, it may not do that, it may do this. So most of the time over here it's highlighting for us. It's saying only 10% of the time it can get down there. Yeah, it's work, like coming. I think Boston was saying he's like this, or saying this is a lot of work. It's like, well, yeah,
That's what it takes to be successful. You got to put in the work.
man,
This,
I'll tell
this
you.
is this
I know
is
it just
super
doesn't.
helpful. This is super helpful because right now I'm just thinking. You're telling me 10%, right? In the 10% time he touches that, let's say it hit my S1, and we're always debating, okay, we hit the S1. Are we going to get a double hit for the day? I know the stats only say 12%. Shit, 12% is 12%. It happens, right? You want to try to mitigate that. So when you give me a stat that says, yeah, we touched it, but 10% of chance that we got here, there's a good chance we go the other way. So that with some price action gives you a very powerful confidence and taking in a trade. So yeah, that's this stuff is
Yeah,
amazing.
yeah, it really. I can quantify it up.
Just so
Oh, here's your close thing. So I think AVP has asked about the close, or maybe Tokyo, but so anyways, it gives the odds of the Monday close below a price. So below 51.70, it's only saying a 39% chance here. So that gives a 61% chance it could close above.
So I'm not good at math, but if I had the odds that it's closing 39% that it doesn't close low 117, do we have the odds of where it won't close above? Because that would give me my odds for an iron condor.
Can't remember if I put those in here or not. Let's see, odds of Monday close below. Yeah, if not, I can add them. I can't remember if I got them in. Odds 50-50. Oh, let's see. Long theoretical price at or above 50.92. Where's 50.92? Uh, oh, odds of Monday close above 51.179. 60.98. And over here, it's kind of showing. Here's the normal price range. So,
Yeah, we could just get it from there. You're correct. You got your 50% capture rate there.
Yeah, and really you can't get any more than 50%. That's kind of the industry standard. Yeah, we'll send out some this week and see what, last week we are kind of getting, it's kind of showing some interesting stuff.
I had a question about
Thursday.
the win rate versus the odds, and why exactly they were different. So,
Yeah,
you were showing
I
the
figured you might. Yeah.
you were showing the wall long and the wall short, where it says 25%, but it's saying it has a 90% chance of being below. So I know it's one of them's capturing the price action, but it's also saying for some of them, it only has a 10% chance of hitting this area at times.
It's because of skew. So I figured you might mention that. So there's a skew thing that happens. So the system geometrically, it's finding the high and low wave sequence waveforms up and down, up and down. If you look in the data, and the data breaks it apart into two components, the long side and the short side. Now, what's weird is the long side can have a negative skew to it. If you look in here, you'll see that there's a negative change and a negative change. So there's two. And then I'll guarantee here on the long side, there's probably at least 1, 2, or 3 positives. If not more. It looks like there's even more.
What would that signify?
And what that's in so yeah, so it's standard error. So you know how like somebody will do a poll and they'll be like, oh, it's a plus or minus error in the poll. Like a 4% error maybe. When you're measuring, there's never an exact way to measure, if it kind of makes sense, because when you're polling people coming out of the grocery store, they may be lying, they may be in a hurry, they'll just tell you whatever you want to hear, so you get these errors. And the same thing happens in trading. And the way it's happening is when we're identifying the moves up and down through this geometry we've got going on, sometimes there's like misses. For example, an inside day. So let's say you're figuring your highs and lows every day, and you have an inside day. Well, that day's like your measurements now kind of messed up because that inside day didn't create a high or it didn't create a low. So it's kind of like you get this skew occur. And what's happening, like on the fractal thing, sometimes, see this where there's not a defined H or L value because it didn't create a high and it didn't create a low. And then what happens is in SpreadMonster, because of that, we get these oddities where on the long side, you'd think logically, well, it should be all positive values. We should never have a negative value on the long side. Well, because of these oddities, we do get that. And then what that starts to translate into this stuff here.
Is that something you would want to filter out in the future, or is the oddity recommended to keep?
I, you know, so the way it gets dealt with is in here. When we go to the odds graph, we get these weirdo overruns. Like, because technically on standard deviation, I mean, how could you ever have the short side contribute to the long side and the long side contribute to the short side? Well, if you see what's happening here on the frequency of price, they are crossing. So the long side at some points in time became less than the short side. And the short side at some point in time became longer than the long side, because it's accounting for the fractal measurements up and down having errors and or mistakes in them. If that kind of makes any sense. And then it shows up into the counts. So what ends up happening is this really weird oddity thing where the 50% of the short side can slightly exceed the 50% to the downside too. So that's why it's kind of, as you see this 50% here on the short side that's exceeded the long, it's accounting for those negative values it's seeing.
That's why it's showing that
You
on
know,
some of the bearish moves, 50%, but on the bullish side, it's 33% because of those.
yeah, because of that variability in it. Because I didn't want to hide the fact that it's calculating that out. Because it could be significant. Because if you come in here and you're like, the long side actually breached the fractal systems, figuring out the long side actually breached the short side down. Well, it's defining that breach in the range in the same way as the short side, so it's not trying to hide the values and make them conform. Yeah, so it is just pure calculation, and then that's just thrown on, here, the warts and all.
Then
Is
I did have
thrown
another
onto this,
question.
so it's not.
So which one would be a better statistic to use then? Would it just depend every time?
I think so. The guaranteed move here is between these two, this range. So it's saying that it's kind of like over here. It's saying that at least a bit, a penny, a portion is going to probably be in that range. So let's see, this one's for Monday, the 18th. So come Monday, it's saying based on this behavior, something's going to be inside here, most likely. And, it would take a really odd instance where it would jump out way down here, jump out way up there.
And at that point, it'd just be a matter of trading back in.
Right, to touch. Yeah. And when you have the system and you're flicking through it, you'll see the purple bar here show up, which represents the volatility up and down, the high and low. Like here on those yellows, you'll see it like almost always have to touch. There was one time it didn't. But that time it didn't too. It's making a liar out of me. But so what happens too is I'm at the start of the data series right here. I'm at the top, so that's why it looks kind of weird there. So I need to open up more data.
Oh, is it because it needs like
'Cause it's
more examples?
Yeah, because it's keying off 3L. And so what significance that has is at a 3L, it's more oversold. So when I'm clicking previous, it's jumping to all the 3Ls. Because it wants to know what happened when the market was oversold. What happened next? Because we're in an oversold condition. So it needs to know, by the forward-looking aggregations, what happened in those oversold conditions. Did we get a radical move up, down? So as we're walking back through them, it's telling us on the 3Ls, as we're trying to find some edge in the market. So I'm going back to the prior 3L. This is what the volatility looked like. It was in the yellow bands. If I go back to a prior one, it was way at the top of the yellow band. If I go back to another prior one, way at the top, left. Because if we can somehow here, it didn't do that. But if we can get an advantage somehow, a little bit, I'll open up more data. This will help. So it looks like that. So this is good to know information because a lot of times on the 3L, we're hitting the top yellow line. Or at least getting close to it.
Not a bad day.
Yeah, like this one. That one just shot above the yellow line on that 3L. Got above it. Shot way above. So there it didn't get up to it. Didn't get up to it. Shot way above it. So it's just a way to be like, okay, what could be incoming for the session by checking past patterns. And then the other way again is like doing the weekday matching. So this is Monday. It's Monday, so if I go back to previous Mondays. So previous Monday.
So this is just basically a culmination of everything.
Yeah, it just really brings a lot of stuff together.
Oh, that one was perfect.
Yeah. Yeah, so when it's set up for like the days ahead that aren't available yet, like here it puts in the X's to kind of illustrate where the price has been at least some of the time. Yeah.
It would be nice to expand that purple line to be able to see kind of the time ratio. But
I was just thinking the same
Yeah,
thing.
I totally agree.
Maybe
Yeah,
not forward looking, but at least historically. Because at that point, you'll know your high, low, close, open.
yeah, totally.
Because
Yeah,
when you
that's
go
so
past,
important.
when you go backwards, you have the velocity of the move, great, but where did you start? Where did you end off? That could help tremendously. I can understand you can't
Yeah.
calculate it forward looking, but if you're if you're referencing forward with previous action, that helps. But
Oh yeah.
the other
Yeah,
ways,
definitely.
I got a naive question because I'm new to all these amazing tools. Every tool is one better than the last. What in your expertise, when would you use SpreadMonster and when would you use AlgoFun? I don't know AlgoFun well enough, so I could be at a handicap, but I'm just curious. On what instances would you want to use AlgoFun and
So
what instances would you want to use Spread?
so this algo fun, this thing's about when we get it fully all connected up with our queue, and so we can submit orders. You'll be able to do strategies. So, for
oh,
example, when Google maybe crosses the pivot line, you tell it to buy the stock, for example, or you tell it to buy a directional call, or you tell it to buy a spread. So it's all about how you want it to react. And you set that order up and you send it to the server and it just does it. There's no thinking, no having to watch the screens. So if you're telling it um on my first hit over pivot, just buy and then set my stop to X, that's what it does.
all I'm
And
hearing is I'm
you
moving
know,
all my money to IBKR soon.
yeah, it's just because simplistically, for example, the fractal systems always ebb and flow above the pivot down below. And so if we're in times that we know that with our other analysis, oh, we're long, or down here, you can tell it to use the ribbon, which is another fractal component under the hood. And when your ribbon's green and you cross, just buy, you know. So that's what Algo Fun does. It's just like a set of orders, and it just executes on them until you're done with those orders. So it's just automatic. And then so Rogue Moose, Nick over there, he put in the so he has the neural data feeding. So I take the neural data he's feeding and I stuff it into the database. So I stuff it into Algo Fun. And so as the neural data is going up and down or whatever, you can use that. You can use that in combination with crossovers, a pivot, cross under, vector crosses, whatever. Um, so yeah, this is just meant to be pure automation handled at the server side. So you create criteria you like, and then you send it to the server, and it just follows it until you stop it. And then you set up your basket of stocks. You know.
It
So
seems
that's different than the SpreadMonster. SpreadMonster is kind of like, hey, draw it. Tell me what to do.
it seems like for the algo fund and what you intend on setting up, you can specify, say, the waves or time frames of after certain points, but it can't do that yet, I imagine.
Um, Yeah, right now I just put the core in it. So down here, the core stuff is just like you can say wave 50, for example.
Oh, okay.
I haven't added the instructions wave 50 or wave equals 7. Cursor's at. There's no wave 7. Yeah, so there's more to algo fine. I'm just trying to get the core stuff in.
Oh, okay, it's just not in yet.
Real quick on Algo
Yeah,
Fund. I know. I'm sorry. On Algo Fund, you mentioned a search where you can look at all, let's say, 10% hits or 20% hits, either one on a 60-minute, on a daily. Let's just say on a daily, your 10% hits, but you only want the daily. You don't want the 60 minutes to show up. You don't want the 50, the 1 minute to show up. How would you do it?
so you first tell it wave daily.
Okay.
And then that'll bring everything up for the daily. I hit search. It's taking a second. I don't know.
I'm sorry.
Well,
You know what? I put it in the same command line. That's what I was doing wrong.
oh, gotcha. Oh, there you go, BB. Oh.
How old's BB?
I think she's 2 years old. People drop their animals off out here. We're about 2 miles from town. And I carved out like about 2.5 acres from one of the farm properties we have, and we built our house on it and stuff, and it's kind of buy some equipment we own, and people drop their animals off out here all the time.
Is it not time frame equals daily?
Let's see.
Yeah, last time I tried to use AlgoFun, it seemed kind of buggy, and I couldn't tell if it was me using it wrong or.
I thought it was me using it wrong. That's what I chalked it up as.
Should be pretty clean, but it's being slow for me right now. Yeah, time frame equals daily.
Following 35 stocks just crossed the pivot line to the long side. ES equals F. Wave 501 minutes. ES equals F. Wave 1015 minutes. ES equals F. Wave 760 minutes. NQ equals F. Wave 501 minutes. BBY. Wave 7 daily. AAPL. Wave 760 minutes. ZC equals F. Wave 1015 minutes. USO. Wave 760 minutes. NQ equals F. Wave 1015 minutes. NQ equals F. Wave 760 minutes. ISRG. Wave 7 daily. Mu. Wave 1 daily. mRNA. Wave 1 daily. Low. Wave 1 daily. JD. Wave 1 daily.
Does it take a snapshot of it as well?
Wave 1 daily. HG equals F.
Oh, what's that? It's
Wave 1 daily.
I accidentally turned the alert on, and now it's talking
Wave
through
1 daily.
everything.
1.
That happened to me.
Wave 1 daily.
It doesn't shut up
Yeah,
after
whatever you
a
do,
while.
Wave 1 daily.
yeah,
Joe, you have to
don't click
close
that
Algo
button.
Fun.
Wave 1 daily.
Yeah.
BBY. Wave 1 daily. Bobbin. Wave 1 daily.
Yeah, it's better.
So for the ones that are touching the daily neural levels, it's more of something that, yeah, this is an opportunity where it's touching neural on the daily. You could play it.
Yeah, it needs to. I think when I put the neural levels in here, let's see. See if it has the levels. Yeah, I think I need to add the levels. I don't think the neural levels came over. So it needs to be, for like trading instructions, like the price is above whatever. T1, T2, T3, I think is Rogue Moose has it in there. And the S1, S2, S3, I believe.
Would you be able to
But,
set it to
yeah.
clusters? Like 10 or 20?
Yeah, the cluster information should be coming through also.
So I just use the ones on the side to try to set it.
Yeah. Yeah, that they should be transmitting through here. One issue with all this stuff, this needs to run across more servers so it's faster. Because right now, Algo Fine, it's being run on just one server. So it's processing the symbols from top to bottom. So, I think it's taking about 15 or 20 minutes to get through them. And then it restarts the cycle. So there needs to be more servers so it can process very quickly. It's more of everything.
Yeah, because I see it. It's just not appearing. I don't know what it looks like. Oh, there it is.
Yeah. So they're down here. They're on the my network is so slow right now. Levels, pivot vector. Clusters. Yeah, so we should be able to address like that. And last price. So that should, I think AVP, you're asking about that? Algo clusters and last price greater or equal to below
Yep.
10%. Is
Screenshotted
that
that
what you're after?
because
Stuff like that?
absolutely, because now it saves me from looking through a bunch of charts. I know exactly what's hit the 10% on the daily. I can focus on that.
Which direction is it? Greater than equal to or less?
Greater than equal to. And here's for the bear side. So it should be last price is greater than equal to bull 10%. And then if you want to do the flip side, last price is less than or equal to bear 10%. And then if you want to combine both, let's see, algo's clusters and price. Okay, so this does both. If you say algo equals clusters and the last price is greater than the bull, or the last price is less than the bear, and then you get both sides show up.
So this is quantifying that it touches the bull 10% or the bear 10%, not necessarily if it's getting a bounce off of it, just once it achieves that
Correct.
level.
It's once it achieves that level. So it's either above it or it's below it, and then it shows up in the list.
Mhm. So, just a
Yeah.
side question about something like this. Um, so occasionally we don't get that big of a move off of the vector, right? So, or rather,
Yeah.
when we come back into the vector, let's say we're down, to 10%, it reverses back to the vector. And occasionally the vector is something that's adaptive, right? So
Yeah.
it would sometimes it just comes down. And with brokers that we send our price to, right? Say like 10% at $15. The original vector was at 20, but it's come down to 18. Since algo fun is meant to be something that's adjusted in the future to be able to account for automation, is that something that you were going to make it adapt to say, oh yes, it will hit the vector or adjust to it, or how does it? I guess what I'm asking is how does it all come together? If you had an idea
Um.
regarding that. I'm not sure if I made
Yeah.
any
So
sense.
I'll go. Um. I think I'm kind of following. So the intent, or how Algo Fund runs when it's hooked into the trading system, you have the strategies that you develop, and let's say you want to sell at the 10% line, right? So you go up to a bull 10%, and then you're like, okay, I want to put on a short position. So when you're greater than or equal to bull 10%, there's a couple. One issue is the vector is going to take time before the price crosses through it. It's possible when you go up and spike through it, I see this a lot, that the price comes back down almost immediately. So it's like when you set up instructions for the trading system, it's like if the price is greater than or equal to 10%, there's a decision. Do you want to put the trade on right then? Or do you want to wait some time? Or do you want to use some alternate, once you achieve it, do you want to use some alternate logarithm to determine when you put the trade on? So is that kind of what you're trying to ask? Like when it achieves that, are we like what actions are to be taken?
I
Or
guess
no?
since this was something that you wanted to potentially have your own exchange for at some point to be able to really control everything, I'm not sure if that's actually the long-term goal or just we're just talking about it. But it's in regards to that. Go ahead.
Yeah, so when Nick and um, Aaron and I are talking, I'm like, to make, because the way I've done this for corporations, I'm like, the way to make this robust is, we kind of need control over our trading. That's trading system. That's where that came from, to be able to be like our own broker, so that we can have servers that are connected as closely as possible to the exchange servers.
Mm-hmm.
So that way we don't have slip ups, and that we have our own technology employed. Because, kind of like right now, if you're using TradeStation or IBKR or E-Trade or TOS, you're kind of held hostage to how they run. So I'm like, for this to be as pristine as possible, it's kind of like we need control over it. So we're, not having the Yahoo data issue, where it's like, oh, great, today the option thing isn't working because of whatever. or it seemed like during the week they were dinking around with their network and then it broke for a couple days, you know. So it's like we need to have control over this stuff. So that's where that came from. Not exactly trying to be a brokerage as so much as just trying to have our own technology so we can submit our own orders and not have to be reliant on other people for that, you know, to get as close as possible. So the idea is that when we're creating our own algo system and our own algo servers, algo fun is the front end exposure of that, and it lets the person come in and craft what they want to do and then submit over to the servers we have running. And then they're in a protected environment, and then they manage that order and those instructions and run it. Because if you kind of see what's happening, the way the system will all glue together, you know how we have the scripts over here that define our cluster bands? We have the script. I have 130 of these things, but I only implemented a few right now. But so there's a lot of these scripts, and then there's a capability to write your own script. So with these scripts comes the power to write the instructions inside the script, or there's also a feature of the thing that I need to bring over. It's a script builder. So if you don't want to code, don't know how to code, or like me, I just want to get stuff done fast, I go through the script builder and define what I want it to do kind of visually, and then submit that with, like, for example, Algo Fun. If you want to take the trades at the 10% line, that's actually the script it's running on the server right now on the back end. Is, you know, so you would be like, okay, I want to take the, you know, that cluster script, and here's the additional instructions I want you to use for executing against the orders.
Oh,
you know, so you can what to do.
So you could say make it adaptive and say once it hits the 10%, I want to set a stop loss at this point under, or once I want a profit target to be the vector, but if the vector moves up or down, I would like it to adjust to that level. So it's essentially something that can be adaptive, and
Yes,
you can tell it
100%. Yep.
and you can tell it what to do in that system within IBKR through here.
Yes.
That's
Yep. Absolutely.
That's amazing.
That's where it's going. Yeah, because it's like the only way the ATSs work is like through that. You know. So yeah. So we have to have our own like we can expose our orders to the market. So it's kind of like running with your headlights off. We have our trading servers, and they're holding orders back, and when it sees conditions, that's when they go. Versus, like, you know, when you put in a resting order or you're doing brackets or something, or you put in stop losses, you're actually passing that information over to the exchange for everybody to see it and screw it up. So this is like to counter that. So yeah, so it is adaptive. It's based on instruction set, and it's based on, you know, our trading servers watching and then executing against that. So it doesn't tip anybody's cards to the market, you know. When I first started trading stocks, I was like messing with penny stocks, and I used to goof on them. I would watch the order book, and I would add my orders, and then I'd pull them. And I'd add them, and I'd pull them. I would do that just relentlessly, just to screw with. Because I would go after, so I'm penny stocks, so it'd be a 5 million float, right? So there's not a lot of trading activity at times. So I'd be pulling, I'd throw in like a lot of one, and I'd pull it. And I'd add like 5, you know, just constantly. I have my little algorithms running doing that, and so I was trying to see the reactivity of other traders to that.
I think
So
I think I did something similar once where when I was big into crypto, I was kind of manipulating the price of a banana coin between like 5 and 3 cents.
yeah,
And
yeah,
it felt powerful doing it. And then I went into their Discord and someone said they were selling their banana coin to pay for their rent and they're sorry they couldn't hold anymore. And that was the day I
uh-huh,
realized I was a bad guy.
yeah.
And I should stop.
Unfortunately, yeah, unfortunately through trading, I think we're all, you know, what's the word? If you're not cheating, you're not winning. So, yeah, the orders of the game are like, well, if you put in resting orders, you put in orders, you're not supposed to pull them and put them in and pull them and put them in, right? But yeah, it doesn't,
Technically,
so
as
that's the way it
long as
works.
you trade one, you're not doing anything wrong. As long as you trade one transaction. So if you put up, 30,000 contracts and you just fill one of them and pull the rest, it's completely legal.
Oh yeah, 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 exactly. Yeah, yeah.
You ever front run a real order on an option? That's the most fun. I've seen, if you watch the time in the sale in the Dom on a option, I did it on Facebook once, and they constantly, some guy wanted to acquire a position. It's not your dailies. You're not going to see this on 0 day. You're going to see this more on like a week out or what have you. They wanted to acquire a position. So you'd see on the Dom, uh, just like 300, 400, a specific option. At that point, it's a lot. And you could just buy it, try to buy it right in front of them and sell it to them, right? You got the spread, not much, but it was enough. I must have done it like
Yeah.
50, 60 times. I got lucky to get like 20 cents on it, 15 cents on it. But still, the fact that, you could spot it and do it, that's the fun part of it, right?
Oh yeah. Yeah, for sure. Well, Goldman Sachs, I mentioned this sometimes they got in trouble for that. They had some servers in a wiring closet over in the New York Stock Exchange just years ago.
That's right.
And they're
Yes. Front
coming
running
right out of the
everything.
servers. They were trying to front run everything. Yeah, you see orders come through. Okay, we'll buy it and then turn around and resell it to the. Yeah, they kind of got in trouble for that.
You could get 15
Yeah.
cents, 10 cents on a Facebook contract, 20 cents, right? For milliseconds of work, you know? And you're running through
Oh, and
a
dude,
thousand?
exactly. It's a volumes game, right?
No.
You do a lot of volume, man. Those pennies add up.
Those arbitrages are just. I ran an arbitrage once on $7, thousands of times, 7 cents, it's just when you can find those, just shut up and just do it till your fingers fall off.
Yeah. Oh, absolutely.
There's a
Yeah.
lot of people here now.
Yeah, that's the other thing. I don't know how well this stuff all scales. Like if, we're having all this stuff put together and everybody's trying to pile into the same thing. I'm not real clear on that.
I think, well, for the Periscope, I think we have a lot more eyes on that nowadays with thousands of really like people peering into it. And but the clusters, the algo fund, the 10-20% on the longer
Yeah.
time frames are a lot more viable for, you know, smaller plays, as well as
Yeah.
SpreadMonster giving people positions to really either take contracts or contribute to the market's liquidity. It's not the worst.
I think you're going to have no issues on any of the indexes. I think where you're going to have issues is when you target a specific strategy that targets a specific contract, and especially on the affiliates where they're calling it out, right? Really, what's our call outs here? When I look at Russell's member plays or when Russell posts something, I'm like, I need to learn this and I need to, even if I don't understand it, try it on a very small scale basis, right? But you're not going to have a tremendous amount of traction here. When you go somewhere else where there's 1,000, 1,500 people trying to pile in on a ENPH contract that's $10 out, that's 12 cents, that's where you're going to get screwed. But SpreadMonster on an SPX and a QQQ on an Amazon, I don't think so. I don't think you got any challenges.
Yeah. 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 I tend to agree with you. Totally. Yeah. You bring up a good thing. This Periscope, man, I'm going to do the bearish side this week. I'm going to see where we open like Monday. You know, we're on that NASDAQ support line.
Mm-hmm. If we open under Apple, maybe what was that new one, SMCI? That could be a
Yeah.
good runner as well. I don't know how those Periscope contracts look on that, but I don't think. Do we have it?
Please take AMC out. Please take AMC out.
I know, man. I heard you. I'm like, if I get a second, or if Rogue Moose Nick can get a second, maybe he can hack it out of there. I hear you. Yeah, I don't know in there. It's all like stuck up. It's all gummed up in it.
Okay, I've got a
Yeah,
question for
the
you on
puts,
this.
the berry side. Man, I'll I'll
You
tell you this
mentioned you can.
Periscope. One thing that kind of hurts us. Oh, go ahead. What's that?
No, no, you first. You first. Mine's a side question. You first. Please
Oh,
continue.
what I was gonna say is one thing that kind of hurts us a little bit is when we generate signals, we're 10 minutes off on our option data from Yahoo. So it's like there's a little bit of a disjointed thing going in there, you know what I'm saying? But you know, I just put these things on a watch in like in Think or Swim or whatever, you know.
Oh,
That's all I was gonna say is if there's new people here, they may not understand that there's a 10 minutes delay between what we see on the screen here. The signal's almost near real time. And then we have that 10-minute uh, delay. So it makes the server in the background not be able to exactly catch it when it's about to go green, possibly. But
You
anyways,
typed you typed something the other day to a question of mine where I said, for example, on ENPH, I know when we go to the data, and I was looking back, right, back to November, whatever. You can go 2 weeks back. I was trying to extract the data uh, to see if I can get like a price for the options data. You said something, but I honestly was not capable of digesting it. How could I extract options data? Because you must have options data to give me historical data. Because every time you see data warehouse row 90, what have you, how can I see that, or is that something you want to tell me later?
yeah. Yeah, so in the data warehouse screen, so I've got a problem. Um when the data is going into our SQL server, it's going in by this long name right here. So there's a bunch of there's just hundreds and hundreds, probably thousands and thousands of tables now that are done by this name. And what I really needed to do, so the system was built on CSV files, and I'm pulling it over like I mentioned. What I needed to do was create just a table for inf option data, FDX, Goog option data, and then have the, you know, the strike and the price action in there. So yeah, so you can get at it. It's just, I can send you the names that you'll need to use. It's just you'll have to use a big long name to get at the table to extract it. But it's in there.
Fair enough. Thank you.
Yeah.
Oh yeah. I think we talked about it a little bit, Russ, but before with the whole POS thing, and you guys had prior scripts to this. Is it still kind of the same where you want to integrate everything on Charles Schwab once they actually get it all running again? Or are you kind of more leaning towards IBKR in the long term?
So, gotcha. Yeah. So right now it's just, I'm trying to, IBKR is one of the few that have a fixed protocol that we can use. And ideally we have our own option data and stuff that's real time. Because what actually happens here when you're, it's kind of weird, but there's an option screen that goes over here on the right hand side, the calls and the puts. And what happens is, as the fractal is moving through time and price, these options start to change the contracts. Because most of the time on the platforms, when you're trading options, you're having to pick the strike and the expiration date. So the system automatically is not here because we don't really have the option data that's real time, but it runs in these right hand panels, and you tell it to pick, for example, the
are you talking about the
high leverage.
I think you
So
can right click it.
yeah, so you know, yeah, so there's this
Yeah.
options controller, and this is all part of the whole grand scheme of the system. But you know how in QQ Live I'll show the Thinkorswim paired next to the fractal graph?
Yeah.
The fractal system automatically has it, so it has that in there. It's not on, it's not enabled, it's not turned on. So what happens is, if you see the screen over here on the right hand side are the option graphs that show up. It's not turned on, so you know you don't see them, but if you could pretend you can see them.
Mm-hmm.
And then what you do is you tell the system to find the high, if you want, the high leverage contract with the most upside for hitting 50%, and it does it. So as the prices stream through, it starts adjusting these option contracts for you to find the ones that are high leverage based on this 51-54-12 being hit, or the 51-81-07 being hit, or the 52-54, so you tell it. Then, so Nick and I, we need to finish this out and kind of started it. It's not done yet. We're measuring prior option moves with volume, so that when we project based on clusters that we can hit 51-81-07, we can guesstimate, we can derive how much volume that contract can support for exit and entry. So we know classically that contract may support, like, you know, a lot of 5,000 total at entry and maybe only 3,500 at exit upon achieving that 518107. Because another thing in trading is knowing if sizing will work. So there's, it's not using Black-Scholes, it's using a whole different set of math based on historicals, how much volume and how the velocity is impacting that move. So it's like querying the system and saying, hey, at 11:15 a.m. this morning, if we hit, 518107, what will be the price and what will be an approximated volume of turnover there? If that makes sense. And it automatically will put it into the option contract shown on the screen. And it'll put the level. So you'll absolutely know targets, absolutely know how much volume can possibly be supported.
And you might be able
So
to automate
it'll
like
take
that.
away the. Yes, exactly. So everything we do will go into the automation system, right? So when you're using clusters, so AlgoFun, when you're setting up your logarithm and you're like, you know what? When I hit 50% cluster, I want to take a swing at a option. I want to pick my high leverage, and I want to pick maybe 2% of what could be supported volume for that contract. So when you buy your options that you'll be able to exit and that you'll be able to know to get them. Because that's another problem. Like when you go after options, like sometimes I get partial fills, right? So you may put in for, I don't know, 20, get 12. So you need an idea when you're putting on your trades, what is the supported, contract volumes you can possibly get for entry and exit. Because like the other day, Rug Moose, like he's telling me, I was trying to go after 20 contracts, but I only got a fill for 13. And by deriving this information and storing it in our database, it'll give us a really good idea for those flows.
I mean, it also might be better.
Yeah, and that'll go into Algo.
What if you broke up the orders? Because so typically when I was trading SPX and try to put in 100 order, right? Doesn't matter if it's 20 cents or it's $1, right? Issue is as you're getting filled, it's moving the price, right? So then it moves away, so you don't get your fills, and then it comes back if nobody else tags on. So we'd always put in 10 orders of 10 or 5 orders of 20 because you get that better fill. Does that work, or could we do that, or no longer works?
You can. So what this does is when we get these tables populated, they let us know what can and can't work. Because when sometimes on the contracts we'll see these spikes, right? You'll see a spike like, oh my god, it moved 500%. Well, there could be 3 contracts traded there. It doesn't mean that it supports somebody buying 50 contracts or 100 and then trying to exit at that price. So when Algo Fund's running and if you can't be in front of the automated system, there's all kinds of stuff that has to be in there to help you, because you don't, like in an automated sense, since you're not in front of the screen and trying to exit contracts or trying to get into contracts, you have to have some way to quantify that, when you're putting in your orders and we're going to take a position. So that's where having that information comes in, because it could be like, well, I want to do only 2. I know the thing may be at 14 cents, but I know that it's not going to support more than 20 contracts at the 14, right, or whatever. So you quantify that. We have quantifiable stats so we can use that to craft the orders. Or we know that, and this is another problem. So when we're going after cheap contracts and we have potential, we can see historically at that level it may only support 200 or 400, and then if we have automated systems and we're trying to get 1,000, it's like, well, that's probably not going to work for everyone. And it crosses the line between what goes on now, like the brokers, like IBKR and Schwab and E-Trade and all these guys, Fidelity. Everybody's compartmentalized. They don't have a bunch of traders working as a team. It's all like, well, you guys are all segmented, so you guys are competing against yourself. Well, if we're building a system where we've got our algos running, and there's 50 or 100 of us in the same algo, it's how do we make it fair to everybody? Like, because then we're compartmentalizing everybody again, and maybe some guys get filled and get the trade, and then other guys are like, well, I got screwed because I didn't get any fills. It's like managing all that, like to do the thing fairly, because this is kind of like the community, trading thing, and it's like trying to make it fair.
I think
If you see what I'm getting at,
so.
if we're compartmentalizing and we're all agreeing, like, hey, we don't care, it's a Wild West. We have these algos, and you get filled, you don't get filled, screw you. I guess that's another way to approach it. Whoever's first to set
You
it
can
up.
adjust your buy-in price and saying whatever it is, take it at the bid or the ask. Everybody else is going to try to go for the bid. You overpay. If you want to be on the front of the line, right? That's what you would do, right? When we're trying to get out of our spread, sometimes we're like, the hell with it. Just market order because you just want the hell out, right? You can't wait.
Yeah.
If you look, you've given so much. This is not a headache you could take on. I'm sure there'll be some sort of randomness to it, but if you can't get it done and you really want to get it done, then you can say, hey, when the synchro comes on, pay the bid, pay the ask, right? If you want to be, cheap about it, you're gonna go on one side. If you want average price, you say, execute a limited order at the mid price at the time of the signal, or you could just say, give me the ask for the bid. I think that's you got to limit yourself to that, or else you're gonna go crazy for no reason. My 2 cents. Don't shoot me.
I think
Hey,
go ahead.
Russell, one of the members had a question about, so he wanted you to clarify like the two lines that can be seen on the sinusoidal graph. He just wanted to confirm that are they like created to a point the high or low of the day? Because we can see the waves reversing at those blue lines.
Yeah, so we kind of touched on that. So when they're wave, it's based on the wave information over here. So when I've been sending them out and I go the wave 1 daily, right now in the database, we're not storing the high and the low of the day yet. We need to get that in there. That means when you go to the sinusoidal graph, it's guesstimating where the high and the low's at. So these waves down here and these waves up here, it's making an assumption that the start is low coming off the open. The low hits off the open, and then we hit the high. When you go past 1 day into 2 days or more, then it's got the information. because here, when you go to 2 or more days of price action, you know the highs this day and the lows this day. So when so it's a little confusing right now. So when these get sent out, when they're Tuesday and Wednesday, because usually I try to send this graph with it. When it says Tuesday and Wednesday, and you see the sinusoidal wave pattern, when you see these highs back here on Wednesday, that's when they occurred forward looking, was Wednesday. When you see these lows, forward looking Wednesday. When you see whatever highs and lows are in here, they occurred on Tuesday. But when they're right now, when it's just one day here, it's using an assumption that the low was first in the session and the high was in the last part of the session, backloaded. If you catch what I'm saying, if you follow that.
Yeah. Check that.
But because the database, we don't have that information yet, we need to add it. Candlesticks inherently are wrong on systems because they're always in the center. Well, the high or the low didn't happen in the center. So they're invariably wrong. And then in here, we do the interlacing. And so this shows, in contrast to the candle, what's actually happening underneath the hood to the daily candle. And so we have just so many issues. So data that's compacted or created by the exchanges is so lacking. So as we move forward, we've got to correct the data so we can see more and more what's actually going inside here. So we've also talked to Rhythmic about getting their data so that we can expand on what's being spit out by the exchanges. But here, like when we do interlacing of data, we can see our low, actually this candle, daily candles on all graph systems being incorrect. This wick should be over here, and this high wick should be over here. So it should be from here to here, not centered. So SpreadMonster doesn't, when it's just regularly open, does not know that. So it just says, okay, the low must have been up front with the high backloaded. Probably a lot of the times that's correct.
It was also a news day as well, so.
Yeah. So, yeah. And then here, the tighter you get in time frame, the tighter the interlaced candle interval is against the daily candles. So you can see more and more how the daily candles are being built up. And it's funny, you can see these M patterns that are actually created. Like here, it's it's the same patterns over and over, different ways. So yeah, and here it kind of is lacking that information.
By the way, I think I asked you this about a year ago. How much you really intended on expanding? And then since we're talking about fairness and, in regards to like whether or not you would import Jade Dragon in here, Where do you see us now, like in the grand scheme of things? Because I understand, the idea of fairness.
Yeah, it's kind of, what's been happening in the other discords, because there's several discords on the system, of course. So the people that initially came on in the other discords, for example, unless they're turning into paid subscribers, they're anybody that's paying premium in there, they're kind of kicking the other people off and putting in the premium users on there. Because one issue we've had is, they started putting on, and us too, we're all putting on a lot of new people, and then the people have been here, like Aikyo and of course myself and the others, Rogue Moose and stuff. We kind of get hurt by that because when I'm in the production system, it's real slow. Sometimes I can't even connect myself, so it's like trying to have the technology be, when we first put it on, it was never really meant for hundreds of people. It was just like, maybe 40 people would be on it or something like that, 50 people, and that's kind of it. And then all of a sudden it turned into, like on certain days, it would be like they need to add 200 people to it, which kind of hurts us that have been on it. So we're kind of trying to figure that all out. It's never meant to be, free forever, because there are costs. I have ongoing costs each month, and Aaron and Nick also do too, because we're supporting, paying for the servers that are underneath, and right now there's 8 or 9 servers running it, and it needs to be expanded. What needs to happen is like an algo fund when we're doing a 51, this thing needs to be really fast so that when we have V's carved out, we're crossing vector and we can, run, we need to know that like really fast so we can action our trades. Because there's a lot of money every day and all this stuff moving up and down like that. So, yeah, it's created a little bit of a dilemma, and then as we build out more and more and have trading capability and stuff, like AVP was mentioning, like how do we deal with that? Because the reality of it is in the background, the server, it's going to have to process, if people want to use it through IBKR to submit orders and stuff, it's going to have to process them in an order. So, like if IKO is always first in that order, and then we have, like, let's say we had some 14-cent contracts and they only support 50 buys, a lot of 50, and that was it. And then they get burned up and then nobody else can get them. Yeah, it's like kind of creates some dilemmas. I'm not sure. Like AVP's mentioning, well, it's too bad, too sad. We could do it. So it's like when you use the system and build an algo, you're just like, hey, give it to me at ask, whatever price. So maybe it went from 14 to 28 to 30, and it kind of like, yeah, how to create kind of fairness, because we weren't really expecting this to go mainstream, kind of trying to keep it inside Discord, more low key.
I think there's about
Just for a bunch of us. So.
probably more than 20,000 eyes on this now. Maybe more.
Oh, you think that many?
Probably, because if I were to add up all the affiliates, it goes over 10,000.
Russell, you're still stuck in the days where I could personally DM you and say I screwed up my password. Those days are gone, brother. Those days are gone.
Yeah, it's like, yeah, I kind of weren't really, I never, when I did this is during COVID, we were all locked in home, and I happened to get on that Discord, and I'd post graphs from time to time. Everybody kept asking about them, start posting more, and finally put the server up. So it's like, okay, here you go. That way, you want to kind of check stuff out in a different way, you can. So I'm not really
I, I
expecting
remember
more
those.
than a
I
few
looked at
people to be
those,
interested.
and I thought I took drugs. Now they make so much sense.
Yeah, you look at it, you're like, because you have a lot of people bash them, like it's like stupid. I don't know. And it's like,
Uh,
well, that's kind of how the market's moving around a reference point.
I
And
think Milk says
if
it
you
the
can figure
best
out your
way.
reference point,
Milk says it the best way. You know, if you're going to follow the market, what makes you different? You've been able to take a system and show it from a different angle, which then gives us that slight edge that if we properly apply it with the other skill sets, gives you that little edge like blackjack, where if you're disciplined, you'll make money. If you're reckless, you won't.
yeah, yeah, it's for sure.
I think
And to your point, even Boston said, "Oh, I've got 8 out of 10 trades that were 20%, but I didn't take them, exit them, action them."
well, I mean, I think Boston's case is a little bit different since some people
I'd
are,
agree.
I'm not trying to rag on the guy too hard because, that who
Yeah,
doesn't like free money or quick money, right? We're always just trying to get something the easiest way possible. But at some point with this ever expanding system, with our growing like base, I think something's got to give, and you can't really save everyone in that aspect because the market's ruthless. So
yeah, yeah, that's for sure.
I think at some point you might have to decide how much is enough.
Yeah, yeah, it either has to expand somehow or, you know, right now I just kind of stopped creating logins, to slow it down.
I think I saw an instance where people were fighting each other for their logins.
Yeah, yeah, I get a lot of DMs about, how much can I pay? Can I do whatever? And kind of like, well, we're just kind of halting them right now for the time being.
I'm surprised you answer them at all.
Yeah, well, you know, I try to answer everybody. Yeah, I try not to go ghosting them or anything dark on them.
Mm.
Yeah,
Well,
we've also had people we've had to get rid of because it's like, they're trying to copy stuff and it's like, are not really putting it out there to just let everybody copy it. So that becomes another issue.
well, regardless of the decision you make, hope you find peace with it.
Oh yeah. I mean, the stuff we show, it's kind of I think it's fresh because it's stuff that's not really shown. So
No, I haven't seen it anywhere else ever.
yeah, it's, it's pretty fresh stuff. It's kind of like a lot of behind closed doors type stuff or people do. It's just not known mainstream.
Mhm.
But yeah, yeah, I'll try to get that SpreadMonster out in a few days. And if a couple of you guys check it over just to make sure everything's relatively clean, bug free.
Yeah, I'd love to try.
That way, you know, yeah, get it in your hands. That way, Milk won't kill me because he's like, "Oh my god, everybody's opening support tickets because we got errors in it or something." Wants to rip my arms off and beat me with them.
You want me to just like tell you what crashes?
Yeah, I don't know. Yeah, you just kind of use it casually, leisurely, and then the big thing, the math and stuff. You know, I double, triple, quadruple check it and stuff, so that should be pretty decent. It's just I know there's still a few runtime errors in it here and there. There's other facets to it that I need to block off right now because there's all kinds of things where it pulls up and it suggests things to do to make money. So I'm going to comment those out right now so this stuff isn't going to appear. Because until I have the trading system functional on the back end, these don't really apply. So I need to comment that out of the code because this is, like I said, this is being converted over from another system. So yeah, so
it was nice talking to you, but I gotta head out soon as well.
Oh yeah, I need to jump off.
Yeah.
Alrighty, everybody take care.
Enjoy your day,
Thank you very
Russell.
much.